Rohr here with an early morning global view video analysis on Tuesday, June 10th, 2014. It is currently 7 a.m. U.S. Central Time, and we wanted to wait until this morning to see some important data that's come across. But just to review where the data and general influences have been, we're coming off of the ECB accommodation for their rate cuts and programs last Thursday into a fairly constructive U.S. employment report pre-opening last Friday. So as you can see on our short-term chart on the hourly, out of Thursday morning into Friday morning, that was quite helpful to the market, and we got some follow-through yesterday to a new June S&P future all-time trading high at 1,954.40. Now, yesterday was also some good data, even though the market chose to react after that new high. We saw both Chinese trade, and especially exports, and Japanese GDP and associated numbers come in better than expected. This morning we've had a little weak data out of Australia, but Chinese CPI and PPI were both a hair above already increased estimates. Now this is giving some people pause on the idea that, well, maybe this will restrain any further Chinese stimulus and easing. But the truth is we've also seen OECD, Organization for Economic Cooperation and Development, composite leading indicators this morning, and they say that the emerging market picture, including China, is still pretty weak on a 6-month outlook, even if the developed economies are okay for now. And we don't think that a little bit of additional inflation is going to deter the Chinese from trying to re-stimulate their economy. We also saw UK industrial production that was better than expected, and US NFIB, small business optimism, better than expected. Quite an improvement there. So here we are headed into U.S. wholesale sales and inventories as the last data of the day. And looking over at the chart pictures, the U.S. S&P 500 future is off about 4 right now to about 1946. And just on a very micro view to begin with, that is interesting because that kind of completes a micro out of the activity on Friday through yesterday into this morning, a micro head and shoulders top that would have a neckline right around 1946 early this morning. This is the head, left shoulder, head, and the rally back late yesterday and the drop this morning would complete the right shoulder. But what's always important about these, and this leads to the more important intermediate term point, is they have to get below the low between the left shoulder and the head. In this case, the pullback later on Friday before the market pushed up was right at 1945. Well, what's interesting about 1945, it's also a bigger level on the weekly oscillator readings at 135 over the 41-week average, and as long as the market is staying out above that, even if it dips temporarily, it's going to be more inclined to push up toward the next oscillator thresholds up at 1970 to 75 area. And so this is quite important. Now, the other thing is that the objective on the downside from 54, to 45 is about $9 lower from 46. That'd be right back to about, approximately 37. So, of course, that fits right in with the upside runaway gap, and this goes all the way back to a couple weeks ago when we came in from the Memorial Day weekend and the market gapped to this new high above 1899 to the low at 1904. And we said right along that sets up an objective at 1938. And whether the market, even if it fails to stay out above 45 temporarily, whether or not it holds no worse than 38 will be important on that objective. And of course, as you can see, going out to later today into the early part of the day tomorrow, 1938 becomes this overall channel support as well. So that's very important. As far as the indicators, The weakness later on yesterday did diffuse the runaway above the upper runaway band on the hourly MACD, and yet it's still within striking distance should the market improve. And of course, the upside resistance now is the trading high from Monday at 1954.40. If it were to start to push above that, it would also be the negation of this temporary topping, and that would be important. And that's pretty much it for the short-term view of the S&P. Moving over to the intermediate-term view, it only reinforces the things that we've seen already, such as here was your runaway gap. It was a weekly runaway gap as well, and it set up that objective at 38. Here's your oscillator that, as you can see, is over 130 to 135 over, but is going to dip back down into the higher end of that range this morning. And just the fact that the overall trend is still up, and while we've hit the topping line on the weekly chart, the daily chart topping line going out a few days is more so in step with that next oscillator resistance. And that completes the overall picture for the S&P.